There's a lot happening in real estate markets across Australia this week. Let's face it, I could say that every week. The start of 2020, there's been an enormous amount of events, and particularly the release of data depicting rising real estate markets in many parts of Australia. It's a very stark contrast to where we were just 12 months ago at the beginning of 2019 with the Banking Royal Commission happening, a bit of a credit squeeze happening, and a federal election looming. There was a break on activity and decision making. It's a whole lot different, very much chalk and cheese comparing then with now. Right now, markets, generally speaking, are rising, and many of them are rising strongly. Lots of positive data around this week, as there has been in preceding weeks. One of the stories that came through this week from property research consultancy Charter Keck Kramer is talking about a looming housing shortage in our major cities coming into next year and to the year 2022. They're speculating that we're going to face particularly a shortage of apartments because after a bit of a building boom in preceding years, the downturn in markets, particularly in Sydney and Melbourne, post-boom, has brought a halt to the construction of new apartment buildings, and there was a sharp decline last year in the number of new apartments being marketed. And so they're saying that all of the coast capitals, all of the East Coast capitals, are facing significant shortage by the end of 2021. Now, coincidentally, today, new data from SQM Research, a very good source of information, all manner of things relating to residential real estate. The business of Louis Christopher, one of the most respected long-time research analysts in Australian real estate. His latest figures that he publishes monthly on vacancy rates in the capital cities in Australia, showing a very, very big drop in vacancies in January compared to December. Now, partly that is seasonal because we always expect to see a rise in vacancies at the end of the year in December, and then we expect to see vacancies fall at the beginning of New Year. A lot of it's to do with the academic year, students being major sources of business for rental properties. They vacate at the end of the year and they re-engage at the start of the following year. But compared to the same time last year, there's also been a decline. So we have pretty tight vacancies in most of the cities across Australia. Sydney has dropped from 3.6% in December to 3.1% in January. That's quite a big decline. Still a little bit high, and there's some pockets of Sydney we know from our day-to-day research are much higher than that, and others, of course, are smaller. But heading in the right direction. Darwin's around about the same level, but 12 months ago, Darwin was close to 4% vacancies. Now it's just a tad above 3%. So that market is trending in the right direction. Everywhere else in capital city Australia, vacancies are much lower. Brisbane 2.4%, Melbourne and Perth around 2%. Now Perth a year ago was well above 3%. 2 years ago it was 4 or 5%. So now the Perth market is showing all kinds of signs of recovery, and one of the biggest signs is vacancies. Vacancy rates are a great forward indicator, something that people thinking of property investment should look for in a market they might be considering. Low vacancies tends to lead to rising rentals, and prices tend to follow that trend. It's a great forward indicator, whereas media tends to tell us about what's happening with auction clearance rates and recent changes in median prices. That's telling us what's happening now, but you want to know what's going to happen in the future with prices if you're thinking about buying in a particular market as an investor or as a home buyer. So vacancy rates can be a very good leading indicator, taken in conjunction with other things. So we have very tight markets in Hobart still, about 0.5%, Canberra 1.4%, Adelaide exactly 1%, very tight rental market in Adelaide, and Perth now down to 2%, whereas a couple of years ago it was 4 and 5%. So generally speaking, with the exception of Sydney, all of the major cities of Australia have low vacancies, and we have rents rising now. SQM Research has also today published their latest figures. Every week they put out their rents index and their prices index. The index out today shows that we're still seeing very strong rental growth in Hobart. Not surprising, because Hobart vacancies have been about 0.5% for years and still are. So according to the SQM research figures, on average, house rents are up 8% in annual terms and apartment rents are up 16%. That's a very high rental growth. Adelaide rents are also growing quite strongly, 4% and 3.5%, 4% for houses, 3.5% for apartments on average. Perth, as I indicated, is showing signs of recovery. I mentioned that their vacancy rates have dropped a lot and we're starting to see that reflected in rents. Rents are now starting to rise both for houses and apartments. Brisbane also is starting to deliver healthy rental growth, both for houses and apartments. Now, until recently, one of the stories about Brisbane was vacancy rates very high in the inner city markets, the apartment markets like the CBD, Fortitude Valley, etc. Vacancies have come down very steadily and are now at a level where, generally speaking, rents are rising in Brisbane. And that's a good forward indicator that Brisbane at last is going to show some good price growth, and I will get to that in a moment. Melbourne also showing rental growth. Sydney isn't because, as I mentioned earlier, Sydney vacancies are still above 3%. So in general terms, rents not rising. Of course, there are exceptions, as there always are in a city the size of Sydney. So generally, vacancies very low, rents rising with some exceptions. Now, another story up today from the Housing Industry Association, figures on the sale of residential land. Another great indicator of what's going on in markets. And what they are saying, the latest figures from their residential land report, is that land sales dropped to a record low in March last year, the March quarter of last year. And since then, land sales have risen 46%. So it's a massive increase, another sign of general recovery in real estate markets. And they're suggesting that we now have a shortage of land in our major cities, and prices for land will rise, and that will also flow through to price rises for housing. So big increase in the last 12 months in the sales of residential land. Another indicator that real estate has come surging back since the middle of last year. Now, the latest figures on what's happening with house and apartment prices, again from SQM Research, they put out a very good weekly report that summarises what's happening with all manner of things in real estate, including prices and rents in the major cities. So Hobart still leads according to their figures. The median price for Hobart houses is up 12.5%, very similar for apartments in that city. Sydney has come surging back, 9% annual rise for houses, not so much for apartments at this stage according to these figures, and Melbourne up 5.5% for houses. Brisbane also now starting to show more solid price growth than we've seen for a while. According to these figures, house prices in annual terms up 4.5% for Brisbane, and that figure is gradually rising. I expect to see Brisbane doing better and better as we go through 2020. And I notice a number of other forecasters, some have actually predicted that Brisbane will lead the capital cities on price growth this year. Adelaide also producing some price growth. Perth and Canberra about line ball, no change in annual terms, but strong growth in Hobart. Sydney and Melbourne rising again, and the figures are showing that, and Brisbane starting at last to get on board with the growth which they didn't do in the previous iteration of the boom that was primarily confined to Sydney and Melbourne. The one that we're now coming into is more widespread. It's happening across a wider range of cities and also in a wide range of regional areas. Now, just to finish off, we've recently published our most popular report, which is the National Top 10 Best Buys Report. I urge you to get a copy. It's my picks for the top 10 locations to buy well this year for future growth, taking a medium to long-term view, as we always do at Hotspotting. The top 10 choices are a mixture of the big cities, locations in some of the smaller cities, and also the best regional areas. It's a great report. Get yourself a copy and find out where I think we're going to see the best prospects for buying for future growth and good rental returns in areas that are generally affordable to most investor buyers going forward. That's it for now. Terry Ryder from hotspotting.com.au signing off. Let's do it again roughly the same time next week. Bye.